Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A second bearish black crow yesterday, and really a follow-on to the previous session's very long bearish black crow. This time the market punched down through the support of the significant April 2020 to April 2020 low at 107.25, plus below the bright red highlighted middle time, currently 107.27, of the late December 2023 to early March 2024 bearish shift pitchfork, eventually closing below both of them, but only just. The low of yesterday at 106.97 effectively matched the significant low of 106.93 seen back in February this year. Below this, well, we're in a fairly free area with only some mild congestion until the 2020 low at 106.36 and the lesser Fibonacci line at 106.13. I do note how we have such a large amount of overhanging ammunition overhead, stretching from mid-November last year till today, all available if prices do choose to go down and tackle these supports. Above the market, we have resistances now at the combination of the important 50% Fibonacci line for the whole of 2023 at 108.64, with the recently capped medium moving average nearby acting as a reinforcement. That's currently 108.65, as well as the May 2020 low, 107.66, plus the previously mentioned combined resistance, then support, and now resistance again, of the short medium moving average, currently 108.22, the long moving average, currently 108.27, and the short moving average at 108.07. Altogether, they made a bearish bow tie formation crossing over this past Tuesday. Now, the theory behind this suggests two things. Firstly, look to which way the market, the moving averages move after crossover to indicate the next direction of the market, which we can see is downwards. Secondly, between 15 to 20 sessions after the crossover, we may see one or more of the following: a change in trend, a reinforcement of a trend, volatility. In this case, it will be between the 30th of April to the 6th of May, so watch out. Looking back at yesterday's action, prices are also in between the dark blue highlighted upper time above, currently at 108.02, and the middle time below, currently 105.97, the late December 2023 to early March 2024 bearish Andrews pitchfork. Overall, the action this week has set up the conditions for this week to become a weekly key reversal, and especially to become an immediate countering weekly key reversal down. Thus, if prices close tonight below 107.93, then we'd be on. Anything in between 107.93 and 108.35 would have a lesser outside week. Finally, and I've repeated this earlier this week, please pay attention to the crossover of the tines circled on or about the 26th of April and the 9th of May. Around and usually a very short time after, one may see volatility. So far today, a strong attempt lower from the open and moving within its clear zone below towards the supports for what they are worth, down in the low 106 zone, and further aiding the case for an immediate countering weekly key reversal down for this week. Cable, aka sterling against the US dollar. An immediate countering bullish harami yesterday, though it could be seen as a possible indecisive spinning top pattern. All this coming after the previous session's bearish engulfing pattern and bearish long black Mariposa. Prices tried higher up towards the overhead combined resistances of the very slowly declining long moving average, currently at 125.79, and the 50% Fibonacci line of the July to October 2023 move at 125.90, but balking at testing them and closing up on the day, but not by that far. Further up, we have a load of resistances that have become supports and are now again resistances. They are the recent bow tie formation of the three moving averages. That's the short moving average, currently 126.20, the short medium moving average, currently 126.57, and the medium moving average, currently 126.68, plus the September 2020 low at 126.72. Prices did manage to push up and close over last week's low at 125.36 and the mid-February low at 125.32, as well as the February low at 125.15, but only after first breaching it from above. The big move, first higher and then lower this week, has set up the conditions for this week to be a possible weekly key reversal. Thus, if we were to close tonight either over 126.36 or under 126.23, then we'd be on. Anything in between will have a lesser outside pattern. This is all very interesting, as we might have here an immediate countering weekly key reversal down after last week's weekly key reversal up. Going back now to the recent bow tie formation of the moving averages, these all entered in the right order and are seemingly exiting it in the right order. I asked over the last few days to be on the lookout to see if the moving averages head higher or lower. At the moment, they seem to be heading lower, indicating the immediate direction from the crossover. Additionally, 15 to 20 sessions after the crossover, we may see a further move in the direction of the exiting crossover. Thus, between the 25th of April and the 2nd of May, be prepared to possibly see volatility. Finally, the market has for now exited on the downside from the previously mentioned general congestion zone formed between December 2023 to January 2024, between the 126 area up to the 127.75 area. Now, so far today, a reactionary move back down, testing the lows of December 2023, pushing below them. We are actually set right now for today being a possible bearish engulfing pattern and even possibly a bearish open and close black Mariposa, but we'll see on that one. And actually also for this week to be an immediate countering weekly key reversal down. Euro against the sterling. A somewhat dramatic combined key reversal down and bearish engulfing pattern yesterday. After the previous session's indecisive spinning top pattern, there was also a bullish thrusting pattern. Early on, prices rose up towards the overhead dark blue highlighted upper time, currently at 85.72, and that's the November to December 2023 bearish shift pitchfork, plus the nearby reinforcing and declining medium moving average, currently 85.75, before halting and turning lower, punching down through the supports of the very slowly rising short medium moving average, currently 85.49, and perhaps more importantly, down through the combined lows of December 2022 at 85.45 and December 2023 at 85.47, closing just underneath both. Overall, the market is still within the breach but not broken, purple highlighted, late January expanding wedge pattern. That's currently at 85.34 to 86.34. I recently had highlighted the possibility of the two pipe bottoms, the one seen in mid-February and early March, might lead to speculation we may have a larger double bottom pattern formed with these pipe bottoms. However, this idea is rapidly disappearing due to the lack of any incentive to carry it out. And so far today, a higher open in between the short medium moving average and the December 2022 and 2023 lows, but immediately heading lower and punching down through the purple highlighted lower trend line of the expanding wedge pattern. We now have below the bright red highlighted neckline extension, currently 85.03, of the old May to August 2022 head and shoulders continuation pattern. This neckline created the pipe bottoms in February and March and is therefore significant now. US dollar against the Japanese yen. A combined hanging man pattern and possible dragonfly doji type pattern yesterday, with the market making a new high not seen since 1990. All this was after the previous session's really impressive bullish engulfing pattern and bullish open and close white Mariposa. It was the second close over the combination of the October 2022 high at 151.94. The November 2023 high at 151.92 and this March's high at 151.97, and by some distance. Further up, actually quite close now, we have the middle time currently at 154.08 of the July to December 2023 bullish Andrews pitchfork, which is highlighted in bright red on my daily chart. And then the June 1990 high at 155.78. Overall, we are still within the bright red highlighted pitchfork with the lower time below currently at 146.80. We're We're also still within the large purple highlighted February 2022 to January 2023 bullish shift pitch fork in between the middle time overhead, currently at 159.30, and the lower time below, currently at 145.22. Now, so far today, a further but very small attempt higher, but not so much far, not much by so far. Do not be surprised if you see some profit taking and position squaring prior to the weekend after all of this week's moves. US dollar against the CNH, the offshore Chinese yuan. A counter-reactionary bearish harami yesterday after the previous session's reactionary bullish Mariposa. The decline was, unsurprisingly, down to the lower trendline extension, currently at 725.08, highlighted in dark blue on my daily chart of the recent ascending triangle pattern. Further below, we have the upper trendline extension for the same ascending triangle pattern, currently at 723.74. We still do not as yet have the conditions set up for a weekly key reversal here, though we have come close. All this is in the shadow of last month's monthly key reversal up here in spot USD CNH, the offshore Chinese yuan. However, that is not all. As though I do not show it here on this chart, there was also monthly key reversals up in March for the USD CNY, the onshore Chinese yuan spot, plus the monthly key reversal up in March for the USD CNY 1 month NDF and 1 year NDF. All these are quite significant, especially if we have follow-ons. Okay, so 3 weeks ago I laid out some ideas for potentials below for the then breakout lower from the ascending triangle pattern. Thus the primary target X is down in the 716.05 zone, with a secondary hard to reach target X1 down in the 710.70 zone. The opportunities below have been severely curtailed right now. But for the moment, I'll keep those targets on my daily chart, as we've already had a false break lower and more recently what looked like a false break higher as well. So, as I say, I'll keep them on for now, but I'm happy to retire them in a heartbeat. Yet, I'm also mindful of the potential topside now from this move higher. So for good order's sake, I've marked for now a primary target X2 topside for a continuing move higher at 730.05 and a secondary much harder to reach target X3 up at 732.80. So far today, well, basing again on the dark blue extension to the lower trend line for the ascending triangle pattern, we've seen a move upwards towards the highs of this week. US dollar against the Mexican peso. An indecisive doji cross yesterday as the market has seemingly gotten itself stuck in congestion dating from 2015, and there's some bearish pressures bearing down towards it. Now prices punched up again through the December 2015 lower 1646.25, and the lower time currently is 1647.14 of the dark blue highlighted December 2023 to January 2024 mildly bearish shift pitch fork, but failed to make much headway as just above the lower time we have the newly drawn purple highlighted downtrend currently at 1648.19, which capped the rise. On the downside, the market tried approaching November 2015 low at 1635.08, but eventually backed off, closing at the congestion at 1643.33. Overall, the move back up within the dark blue bearish shift pitch fork is significant, but seemingly not sustainable. Instead, watch the work of the new purple downtrend instead. Now, so far today, a lower open and a move back up, but getting capped. Sort of. It's being breached a little bit, but not necessarily fully breached. It's being capped for the moment by the combination of the dark blue lower time and the purple downtrend.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.